Hi everyone, thank you all for coming here today. Welcome to CSIS, both all of you who are here in person and to our online audience. My name is David Parker. I'm an Associate Fellow with the Simon Chair in Political Economy here at CSIS, and it's my pleasure to welcome you to the latest installment in the Simon Chair's Economic Statecraft Speaker Series. This is a series that's funded by the Alcoa Foundation, where we look at the role of economics as a strategic tool in foreign policy. So before I introduce today's distinguished keynote speaker and moderator, I'd like to just make a quick safety announcement, as we do at all CSIS events. In the very unlikely event of an emergency, I'm your responsible safety officer, so please follow my instructions. We have exits located behind you, as well as emergency exits through the back. And in case anyone needs them, the restrooms are also around the back that you have to go out and around to get to them. So now if you could all kindly mute your cell phones and other electronic noise-making devices, I'll introduce today's guests. So I am delighted to welcome back to CSIS Nathan Sheets, the Undersecretary for International Affairs at the U.S. Department of the Treasury. As Undersecretary, Nathan is the senior official responsible for advising the Secretary of the Treasury on international economic issues, which includes serving as the U.S. Finance Deputy for the G20 Finance Ministers track. Today, he'll deliver our keynote address on United States relations with the International Monetary Fund, particularly in light of the recently approved IMF quota reforms, which passed the Congress last December. Following his address, Nathan will have some time for some Q&A, which will be led by our moderator, Tim Adams. Tim is a senior advisor here at CSIS and served previously as Treasury's Undersecretary for International Affairs during the George W. Bush administration. He's currently the president and CEO of the Institute for International Finance here in Washington, and we're delighted to have him joining us here today as our moderator. So with that, I'd like to invite Nathan to the stage, and I hope you'll join me in welcoming him with your applause.
Well, thank you very much for that kind introduction, and to CSIS for hosting me today. During my tenure as Treasury's Undersecretary for International Affairs, I've had the privilege to work on a wide range of issues having global implications. But perhaps no other issue is as important to international cooperation as effective U.S. leadership at the IMF. As we just completed the annual IMF World Bank meetings, it's a fitting time to reflect on what has been accomplished in the years since the global financial crisis. The IMF, together with the World Bank, is the cornerstone of the international economic system that the United States helped design in the wake of World War II. The purpose of this system was to prevent the beggar-thy-neighbor exchange rate policies that deepened and prolonged the Great Depression, and to foster close international relationships that, among other benefits, can be called upon during times of crisis. The global economic system in general and the international financial institutions specifically remain indispensable to U.S. interests. The IMF plays a unique and central role in this global system. Through its surveillance of the economic policies of its members, and as the first responder to financial crises, the IMF has been essential to economic growth and stability over the last 70 years. The fund works to prevent financial crises by assessing the economic health of member countries, encouraging transparency and strong governance, and by providing critical policy advice. And when crises do develop, IMF adjustment programs reduce their severity and limit contagion to other countries, helping to preserve global growth. As an important example, earlier this decade, when the IMF approved large programs for several euro area countries, there was a severe risk of European and global contagion. This contagion would have had damaging consequences for the global economy, including for the United States. Fund programs were critical in preventing a destructive downward spiral. The IMF, along with multilateral development banks, also supports key U.S. allies and interests in a variety of ways around the world. Over the past few years alone, we have worked with partners in these institutions to marshal billions of dollars in financial and technical assistance to advance goals essential to U.S. interests. And for every dollar the United States contributes to the IMF and the multilateral development banks, other countries provide at least $4 more, multiplying the impact of our contributions. IMF support for Ukraine's recent reform efforts is a timely reminder of how important the IMF is to our national security and economic interests. In recent years, the IMF has also provided critical loans to Jordan and to Iraq, countries that are struggling to combat terrorism and manage swelling numbers of displaced people. In a similar vein, the IMF assists countries in strengthening their financial sectors, helping to reduce the likelihood of financial crises, and to improve anti-money laundering and counter-terrorist financing regimes. The IMF also responds to a broad range of other shocks that threaten the global economy. It was at the suggestion of the United States that the IMF became a first responder to the fiscal stress caused by the Ebola epidemic in West Africa in 2014. To protect the U.S. economy and our national security interests, it is critical that we continue our efforts to strengthen the IMF and enhance its ability to perform its important mission. In 2009 and 2010, the United States led an effort to push for a comprehensive package of quota and governance reforms in order to put IMF resources on more solid footing and in recognition of the rising importance of the emerging market economies. Spurred by this U.S. leadership, the global community decided on a package of reforms that doubled the IMF's permanent resources and gave a greater voice to emerging markets and other underrepresented countries. These governance reforms preserved U.S. voting share, but our influence in the institution also requires having a strong advocate as our executive director. President Obama has nominated Mark Sobel, a career civil servant who is highly regarded both domestically and internationally for this position. Mr. Sobel's confirmation would give the United States a more powerful voice inside the institution. We have recently witnessed what can happen if there is a perception that the United States is turning its back on international institutions. Although we advocated for the 2010 IMF quota and governance reforms, during the 5 years that the United States failed to ratify the reforms, many countries, including some of our close allies, questioned our commitment to the international system. If the United States leaves a leadership vacuum, or if we drag our feet when it comes to necessary reforms, countries will look outside the IMF and the international system that we helped design, and beyond the norms and values that we espouse. With this issue in mind, some have suggested that the United States saw institutions such as the Asian Infrastructure Investment Bank as threats to U.S. influence in the international financial system. But we have been clear that the United States stands ready to welcome new institutions into the international architecture, provided that they share the international community's strong commitment to sound governance principles and high social and environmental standards. Indeed, the existing institutions themselves continue to evolve, enhancing their efficiency and raising their standards to match the dynamic global economy. In December 2015, Congress passed the necessary legislation for the United States to consent to the quota and governance reforms. Completing the 2010 reforms was a watershed moment for the IMF and for the global economy. I would now like to take a few minutes to highlight two important aspects of Congress's authorizing legislation relating to the repeal of the systemic exemption and to the new arrangements to borrow. First, before the United States could consent to the reforms, the legislation required Secretary Lew to report that the United States had taken all necessary steps to secure repeal of the systemic exemption to the Exceptional Access Framework's debt sustainability condition. The systemic exemption had allowed the IMF to lend to countries in cases when the executive board assessed that a debt restructuring, which would otherwise have been necessary, was too big a risk for the global economy. We worked diligently to satisfy this requirement. Through December 2015 and January 2016, our representatives at the IMF met with every executive director's office and with many of them on multiple occasions to compare notes on this contentious issue. I myself had numerous discussions with my counterparts in Europe, India, Canada, and Japan. Our persistence paid off, and in January 2016, the executive board voted overwhelmingly to repeal the systemic exemption. As part of the legislation, Congress also included a new reporting requirement for exceptional access programs. As a result, the United States will not support exceptional access unless Treasury sends a report to Congress describing the program, including a debt sustainability analysis and an assessment of the program's likely success. The legislation also required Treasury to submit to Congress an assessment of ways to improve the effectiveness and mitigate the risks of U.S. participation in the IMF. This report was completed in June and is now available on Treasury's website. Second, the legislation imposed two new requirements on how Treasury handles participation in the IMF's new arrangements to borrow, or NAB. The NAB is the IMF's main backstop support for quota resources, through which 38 countries stand ready to lend additional resources to the fund. The 2010 reforms boosted our quota and reduced the size of our commitment to the NAB by roughly similar amounts. Other countries also reduced their commitments as their quotas increased. Given the higher level of quotas, IMF management and the executive board took immediate steps to deactivate the NAB. Going forward, only quota resources will be used to fund new IMF programs, consistent with our conviction that quotas should be the primary source of funding for the IMF. Nevertheless, the NAB continues to provide an essential insurance policy for the international economy. In the event that another severe global crisis threatened to swamp the IMF's quota resources, the NAB holds $250 billion of firepower that could be reactivated. In order for the United States to support such reactivation, however, the recent legislation requires the Treasury Secretary to submit to Congress a report confirming that the fund's lending capacity is expected to fall below 100 billion SDRs, and that reactivation is in our strategic economic interest. Let me pause to emphasize that ending U.S. participation in the NAB would create uncertainty about the IMF's finances at a time when the global economy continues to face sizable risks. The long-delayed adoption of the 2010 quota reform boosted confidence in the international monetary system, and the NAB helps maintain this confidence. The legislation imposed another requirement regarding how Treasury handles participation in the NAB. Separate from activating the NAB, which makes NAB resources available for IMF programs, the IMF board renews the NAB every 5 years, which allows countries to confirm their commitment to providing resources if the NAB is activated. Treasury will support the next NAB renewal later this year, which will extend the NAB until November 2022. Notably, as part of the quota legislation, Treasury's authority to agree to NAB renewal would end at that time unless extended by Congress. Going forward, Treasury will work closely with Congress to consider the proper size of the IMF in terms of quota and supplemental resources such as the NAB. The work we have undertaken in recent months to implement the letter and the spirit of the quota legislation provides an important predicate for that discussion. Although I believe the IMF is now well-resourced, we will continue to monitor both the size and composition of IMF resources to ensure that they remain sufficient. The 2010 reforms made important progress, but we're not finished reforming the fund. The United States is working to further modernize the IMF system of governance and improve its capacity to deal with evolving challenges. As emerging economies grow, they desire and deserve a greater stake in the institutions at the center of the global economy. We believe that further enhancing the voice of emerging markets at the IMF is necessary to preserve the legitimacy and the effectiveness of the institution. Emerging markets comprise an increasing share of the global economy, and we should incentivize them to embrace greater responsibility to contribute to global economic prosperity through cooperative policies. To this end, as part of the 2010 quota and governance reforms, advanced European countries agreed to reduce their chairs on the executive board by 2, to provide more seats for emerging markets and developing countries. Europe needs to make some further changes in its board representation structure to fully implement this important reform. To advance its core mission of promoting the efficiency of the global economy, the IMF must also intensify its engagement on such critical issues as exchange rates, current account imbalances, and shortfalls in global aggregate demand. For example, the IMF must strengthen its analysis of fiscal space and press countries to effectively use this space to boost demand. The IMF also needs to use its voice to advocate for more symmetric adjustment of global imbalances. The IMF, at our urging, has become a far more transparent organization over the last 15 years. The publication of board minutes, the creation of the Independent Evaluation Office, and the presumption that IMF country reports will be published have all been steps forward. The IMF also should push its members toward greater transparency when it comes to economic and financial data, especially data about foreign reserves. The fund established strong data standards initially through the GDDS and subsequently through the more rigorous SDDS and SDDS+. Now, more than 97% of IMF members adhere to one of these data standards, with China having moved to SDDS reporting in 2015. Making the case for global engagement requires taking a long-term view of the nature of U.S. economic power in a rapidly changing world. History has shown that U.S. global economic leadership is vital to the well-being of American workers and businesses, as well as to the ability of the United States to project its values and achieve its larger foreign policy objectives. Sustaining U.S. leadership in the international financial system and adapting it to the challenges of our time remains indispensable. Our leadership at the IMF and the World Bank is vital to maintaining support for an open and rules-based global system. While these institutions must remain firmly grounded, they must also adapt to the challenges and opportunities of the future, including by recognizing the rising role of emerging market economies. We can either lead these institutions or we will be left behind. As Keynes remarked about the formation of the IMF and the World Bank in 1944, quote, "We have shown that a concourse of 44 nations are actually able to work together at a constructive task in amity and unbroken concord. Few believed it possible," unquote. 70 years later, I'm happy to report that 189 IMF member countries are continuing that task. Thank you.
Great, thank you very much. My name is Tim Adams, and I have the pleasure of being the moderator of today's session with Nathan in the job, which I think is one of the best jobs in Washington. They certainly upgraded the position from what it used to be. Anyway, congratulations. You know, my mother-in-law could never remember the title, and she'd always call me the Secretary of the International Treasury. And I'd say, but there is no International Treasury. She said, never mind, it's a sexier sounding title for those, for friends. And Nathan, you've done a great job, and as you noted, you got the quota reform done. It took a few years. A lot of us were out there digging away, but you overcame really a hostile political environment which appears to have grown more hostile and really questions what we can do in the future. What were the lessons that you took from that process? And what advice would you give to somebody else sitting in that chair in the future when this process has to rerun itself? You mentioned the emerging markets will need greater voice. Obviously, we're going to have to rethink this at some point in the future. How would you do it differently? What advice would you give?
So, Tim, thanks so much for the question and for being here today. And I very much feel a sense of responsibility following in your footsteps. And you set a very high bar for this position, including very active engagement with the IMF. The takeaway that I think I would communicate is consistent with the overall tone of the remarks that I just articulated. And that is that it's important for those of us who are strongly committed to internationalism, working together, who see the benefits of economic integration and openness to capital inflows and investment and trade and so on and so forth. It's important for us to clearly articulate the case for those policies. And in the specific instance of the IMF, I think that the IMF provides three key functions that are indispensable to the global economy and the effective functioning of the system. The first is the IMF is a provider of technical assistance. There are many countries out there where policymakers desire to put their economies on a stronger track, but there is a true shortage of human capital, and the fund, through its technical assistance, addresses that. The second is the fund provides a crucial public good in terms of its surveillance of economic and financial policies of its members. And it does this on a bilateral basis where it's looking at individual countries. It also does it on a multilateral basis and thinking about how all the pieces fit together. And then the third part is the portion of the mission where the IMF is best known, and that is as a lender and as a crisis manager. But I see all three of these as being crucial for the system, and I think it's inherent upon us to make the case in a more compelling, more clear, more vigorous fashion than we have.
I'm glad you raised the issue of crisis fighter, and I'm going to go to the audience. My job is not to ask questions, but to identify questioners. We have, as you mentioned, the elimination of the systemic exemption, which obviously had a lot of politics. My predecessor, your predecessor, John Taylor, was certainly involved in that conversation. You mentioned the NAB. And then if you think about Dodd-Frank and its constraint on the Fed and the use of 13.3 with respect to a crisis environment, are we prepared and do we have the capacity to fight crises in the future, or are we limiting ourselves and therefore are we more vulnerable because of that?
So, this discussion about where is the right place on the spectrum between flexibility and discretion, I think is a discussion that's endemic to the very policy process, and it manifests itself in a number of different ways in a number of different settings. But my feeling is, given that the IMF governance reforms have been approved, that the quota resources are in place, that the IMF is itself on a trajectory of reform and thinking about how it can more effectively do its mission, that our surveillance is better, the institution is better capitalized, and for that reason, I think that we are better prepared. And we learned, the bottom line is we learned a lot through that very unfortunate set of occurrences in 2008 and 2009. We don't want to live through it again, and we've spent a lot of time reflecting on what could be done to prevent a future crises. And I think the policy community and the IMF in particular is trying to implement those lessons in the way it's operating, and that also makes us safer.
I'm going to turn to the audience now, but let me echo something you said in your remarks, and that's about Mark Sobel, who is an institution and probably has forgotten more about the IMF than I would ever know. He really should be confirmed and begin confirmed quickly. And I hope that our friends who are here from the Senate who are responsible or part of that process would look favorably upon his nomination. He truly is a national asset. So with that, why don't we turn to questions from the audience? Right back here in the back, sir. There's a roving mic right here.
Ian Talley, Wall Street Journal. Pleasure to see you all. A couple things. A little bit of housekeeping. Would the NAB renewal expire for the U.S. in March 2017 or 2022? I'm a little confused about that. But more substantive questions. You didn't mention bilateral loans to the IMF that are not part of the NAB. Are you including those in what you consider to be the IMF's sufficient resources or not? I didn't understand how the new NAB activization strategy would actually change what happened in 2010, given that the U.S. said then that the Greek program would be a success. And finally, why does the U.S. not feel that the IMF should have short-term liquidity lines like many emerging markets are calling for?
Softballs from Ian, so.
Yeah, thank you. Let me respond, and given the number of the questions, I'll be relatively brief. On the issue of NAB renewal, the NAB will need to be renewed in 2017, but Treasury continues to have the authority to renew those lines. But then when the NAB expires in 2022, the Treasury no longer has the authority to renew those lines without the approval of Congress. And that's the effect, that's the impact of the quota reform legislation was ultimately approved. You are absolutely right. In recent months, the IMF has approved a set of bilateral lending arrangements where various countries have committed resources to support the IMF. Those bilateral lending arrangements are in some sense a third line of defense. First line being the quota, the second line being the NAB, and only once the quota and the NAB have been utilized would those bilateral loans go into place. The United States is not participating in the bilateral loans, and the present arrangement there will expire in 2020. How these requirements that have been articulated in the quota approval legislation will influence policy going forward. The way I would summarize it as crisply as I could is that there are a number of requirements for us to provide various reports to Congress and to have a robust ongoing dialogue with Congress about the way we are viewing the issues and the challenges that exist, and to explain, which goes back actually to my initial point, to explain in clear and compelling ways why we're making the decisions and why we feel those things are necessary. And then regarding the potential short-term liquidity lines at the fund, I really believe that the constraints there are more in the world of the central banks and thinking about how those lines would be funded and what it would mean. And I think until some of those issues are resolved, it's premature to have a policy discussion about the pros and cons of that.
Great. Next question, Nancy, I'm going to come to you, and then we'll go back in the back. Right here, right up front. Yeah, and while the mic is coming, I should probably also add that, of course, the IMF has its flexible credit lines and so forth that, in some sense, operate as fast dispersing liquidity facilities for countries that are pursuing very strong economic policies. So the fund does have some instruments already that are broadly in that space. One could
debate whether maybe a new instrument might be constructed somewhat differently, but the fund is providing liquidity through those kinds of mechanisms.
Nancy.
Okay. Building on your point of the importance of trying to explain why the IMF matters and should matter to Americans, I wonder if you can talk a little bit about Brexit and what may unfold going forward and the lack of certainty and potential implications for markets and trade, and what the role of the fund can be in those circumstances, including the U.S. role in the fund.
That's an easy question, Nancy.
Well, the framework that I've used to think about Brexit and its implications is Brexit had the potential to influence the global economy through four major channels. The first was through market effects. And we did see some of that, but that was relatively short-lived. The second channel, which is ongoing, I think, is the implications of Brexit for the banking system. And I think that following the Brexit vote, there was an immediate reaction of share prices of various European banks as investors thought through the implications of this for medium to long run profitability of those institutions. And then in addition, there is a calculus that a number of financial institutions who are operating in London and using London as a platform for operating on the continent, there's a calculus that they'll have to do and think about their future there versus moving their headquarters to some other place. And I think that is very much a medium-term issue where institutions will make up their minds over the next couple of years as Britain walks through this process. The third area where there could be channels of transmission and potential implications is in the economic arena. So what does Brexit and this rebalancing of the financial sector and so forth mean for growth in Britain, growth in the euro area, and growth for the global economy? And I would say there, over the last 3 or 4 months, the surprises have been broadly on the upside, that the adverse effects seem to be less pronounced than might have been foreseen. We at the Treasury continue to watch that very closely, thinking about implications for the U.S. economy and the global economy more broadly. And then I think the biggest issue is, what does Brexit mean for the future of the European project? What does it mean for European integration and European consolidation going forward? And if there's one clear message that I hear from my counterparts on the continent, is that their objective in the months and years ahead is to take steps to ensure further integration and of the European countries, and to ensure that the project continues to move forward, if anything, at a quicker pace. So I think there are a number of different channels, and we're paying attention to all of them. Some of them were more of a shorter term, but some of them are channels that are likely to play out over years.
There's a person right here in the back, lady in the back, right there.
Thank you. I'm Katerina Soku with Greek Daily Kathimerini. How do you think the Greek crisis saga that is continuing, the country falling into arrears to the IMF last summer, the fact that the debt is still unresolved, has affected the IMF's appetite to take on big programs like the Greek one was, and indeed its capacity also to effectively enforce its own rigorous debt sustainability analysis for going forward in future programs, among others, the current Greek program that's going on. Thank you.
Yeah. The question that you raise is multifaceted with many different dimensions. At a 30,000-foot level, my sense is that over the last 6 years, the Greek authorities and the Greek economy have taken some remarkable steps toward reform and made progress in making the economy more balanced and more competitive than it was before. On the other hand, there's still more work to be done. And it's essential that for that reason, that Greece continue to work closely with its European partners and with the IMF to implement remaining reforms to labor markets and pensions and so forth. That as Greece implements those reforms and takes broadly the steps that will be needed to make its economy fully competitive over the medium to long run, that will then open the door for a robust discussion with the European counterparts on the issue of debt relief. And as that happens, then that will also open the way for the IMF to participate. The IMF has the capacity to provide a useful role and perspective in these discussions, and it's important that the IMF be at the table as part of that.
Great. Well, you go right here, and then we'll go in the back. Right, this lady right here in the front row.
Thank you. I'm Jennifer Lee with Hong Kong Phoenix TV. My question is about the exchange rate. We know the U.S. government is actively dealing with the exchange rate through different platforms such as IMF or G20. And you also mentioned in your remarks that the IMF should intensify their engagement on critical issues such as exchange rate. So I wonder, we also see that the Treasury released its reports on the foreign exchange policies last week. China was again on the monitoring list. So my question is, as we see again the renminbi is facing a downward pressure recently, what is the U.S. government's position right now? And do you think how in the future probably IMF can play a role in that? Thank you.
So in response to the last part of your question, I very much feel that the IMF has played a meaningful role globally and in specific cases like China in giving solid advice on issues related to exchange rate and exchange rate reforms. And would very much encourage, as I indicated in my remarks, for the IMF to stay engaged and to take steps to further increase the traction of its surveillance and advice. And
may I interrupt?
Please.
So what does that look like? When you say more traction, further advice, what would you like to see them do they're not doing?
So two points. So the first is at very senior levels and in multilateral surveillance, we hear the IMF clearly articulate views on the need to utilize fiscal space, to address large external imbalances, to move toward exchange rate flexibility and so forth. But when we look at IMF surveillance on a country-by-country basis, it doesn't always clearly reflect what we're hearing at the level of multilateral surveillance. And I would say that is one very, very important thing that we'd like to see. And it's, it's a challenge to get everyone working in the same direction with so many countries and so many different sets of country circumstances. But we think these principles are important. The second thought that comes to mind is, with China, we have a strategic and economic dialogue where we have a number of deliverables that, and commitments that are made each year. And we recently went through and thought about how well, on both sides, those deliverables have been implemented. And I think it's important for the IMF to be monitoring in a very real-time way how much various countries are actually implementing the reforms. That then gives a very natural entree into a granular discussion about policy when we're comparing where the country is today with what was suggested 6 or 12 months ago. So those are two examples.
And when you're issuing your foreign exchange report, which I'm very happy to say it has nothing to do with anymore, how important is it to have the fund as a backstop or to agree with your assessment and your list?
So what I think is crucial is that the IMF be emphasizing the same kinds of issues that we're emphasizing of need to strengthen domestic demand, to take steps for large external imbalances to be resolved, for financial sectors to be strengthened, to facilitate smooth rebalancing, and so forth. And broadly for countries to be following their commitments on exchange rates that they made as IMF members and as appropriate as they made as G20 members and G7 members. I think that's the key issue. Now, if on various countries, if the fund's perspective on how those things add up is a little bit different than the way we see them adding up, I actually think that's a healthy discussion. Mm-hmm. So we need them moving in broadly the same direction, but I think that there's an integrity to the process. And in most cases, what they're saying and what we're saying are in close alignment.
Great. I'll get right back here, the lady in the very far back, and then I'm going to go to my friend right over here from Reuters.
Hello, Andrea Koppel with Mercy Corps. Mr. Sheets, we've seen how in the last year a violent conflict in one part of the world, in the Middle East, has spread to affect not only the markets in that region, but also the markets throughout Europe. We've also seen in the last year President Kim begin to pivot the World Bank to address fragility and conflict and refugees with a carve-out now in IDA 18 for $2 billion to meet some of the needs there. What, if anything, is the fund doing to address displacement, to address fragility and conflict? Thank you.
So the fund is certainly very active in fragile economies, and so that's one answer, is that those countries are recipients of IMF surveillance and, very importantly, of IMF technical assistance and, as appropriate, IMF lending. For example, the fund, it's a little different example, but for example, the fund was very active in 2014 in responding to the Ebola outbreak by providing fiscal support to the affected countries. But I think broadly, the IMF is important in thinking about how this all adds up at the global level. Because as you just articulated, a situation that started in one part of the world quickly had global implications. And how do we think about those flows of refugees and the implications that has for welfare of various countries, fiscal positions, growth, and so on and so forth. So the fund is active in those countries, it's active in the recipient countries, it's providing technical assistance. And then the final remark I would make is it's imperative, as the fund does this, that it work closely with the World Bank, because the World Bank is the one that has particular apparatus. The Global Crisis Response Platform that was recently approved by the World Bank Board that the United States helps design and move forward, is designed to address exactly these kinds of issues. And so I think it's an example as well of the need for the bank and the fund to collaborate in thinking about issues that span macroeconomics and development.
Great, ready? Yes.
Hi, Nathan. David Lauder with Reuters News Service here in Washington. I wanted to follow up on your answer to Ian's question about bilateral financing at the IMF and the Egypt program, which is upcoming and awaiting approval. Does that mean that the United States will not be contributing to the additional $5 to $6 billion of bilateral financing that Egypt needs to get that program to the board? And then secondly, on that program is going to require some painful steps, which will be hard on the Egyptian people, probably devaluing the currency, cutting fuel subsidies, given the fact that the government does not have a lot of, well, let's call it democratic support. How difficult is it going to be for that program to be successful, given the pain that's going to be put onto the people, and or is this just a case where Egypt is too important to fail and we just have to go ahead with this thing? Thank you.
The program is essential. These reforms are challenging, but they're also the reforms that are necessary in order to liberalize Egypt's economy and to make it competitive in global terms. Egypt has a young population and enormous capacity, and these kinds of macroeconomic reforms are necessary to open the door. So it's the constructive way forward. We in the United States are supportive of the Egypt program as Egypt is working closely with the IMF and taking necessary steps. We're also working very closely with our G7 partners to ensure that that program is fully funded.
We had the Egyptian finance minister speak at our annual meetings 2 weeks ago. Right over here, and then we'll come back to the other side. That's you, right in front of Ian. Yep, that's you. Right there, yeah. Perfect.
Jonathan Ward, Oxford University. I had a question for you. I wanted to ask about China's role as a major financial power. Just, the fact that the 4 largest banks in the world are Chinese now. Here, according to a CSIS report, China's Export-Import Bank and the China Development Bank, you add the AIIB to that, have more outstanding loans than the 6 major development banks combined. That's, World Bank, ADB, et cetera. I mean, what does this mean, do you think, for American leadership in the global financial system and the role that the IMF will play in that? Thanks.
I think the statistic that you highlight very much does underscore one important metric of China's influence and role in the world. Now that said, I think that the principles by which these institutions need to operate, if they're going to be productive and profitable over the medium to long run, and if they're going to support and incentivize sustainable growth for China and support an efficient allocation of resources in China, I think the principles through which they'll need to function is that they are very similar to those of other financial institutions. So on the one hand, these are very large institutions, but on the other hand, it's important for them to operate by similar kinds of approaches and principles as other institutions around the world. So in that sense, I think that on the one hand, it highlights China's role. On the other hand, it also highlights a commonality. And as these institutions over time further open to global competition, that will also bring an additional element of governance to them as well.
And you're comfortable with the AIIB?
So as I highlighted in my remarks, our sense is that as the AIIB is pursuing sound policies, as it is pursuing principles and practices that are consistent with international best practice and the other MDBs, that it can play a constructive role in the global economy. Certainly, there's an infrastructure need in Asia, and as the AIIB takes constructive steps to address that, that's good for global growth. The other comment I would make is that the documents that have been prepared for the AIIB seem broadly in line with international standards, and the first round of projects that the AIIB has pursued have been either co-financed with other MDBs or have been developed in consultation with them. So these are encouraging signs, but we're continue to watch and wait and evaluate the track record of this institution over time.
Let me go right here, the gentleman with the beard, and we'll go back to the back.
Gary Kleiman, Kleiman International. I want to get back to the making the case. Thanks, Nathan and Tim. And the scars that many of us still bear who worked in the private sector for quota and governance reform and maybe facing the same sort of damage as we head into the next round. And that's regardless of the politically hostile environment. I think a universal message we all got when we talked to people on the Hill was when you're making the case for the IMF, it's a lot of the so-called elite echo chamber, why do my constituents care about this? And I always thought that we could do, although many of us are organized in the private sector to some extent, a much better job of convincing at the grassroots with local bankers and chambers of commerce. And I wonder whether the Treasury or the IMF has any specific programs in mind as we head into the next round to address these constituencies.
So I think the IMF, in its public communications, if you look at the kinds of things that Christine Lagarde is talking about, is very much plugged in to this issue, and that it's imperative that the IMF make the case to ordinary people on the street, about the importance of the IMF and the role it can play. By the same token, I think if you look at the kinds of things that Secretary Liu and others in the administration have said about the IMF, it's about how it matters for US citizens and how it makes a difference. And I think the issues are clearly, a stronger global economy is in US interests. A more stable global economy and a more stable global financial system is in US interests. The case is strong and compelling, and I think we need to articulate it. Another dimension that I think is important is the IMF, as I was discussing, is active in a number of different countries. We talked about Egypt, and we talked about some of the fragile states. We could talk about Ukraine, Iraq, Jordan. There's quite a list, and these are countries where the United States has national security interests. And the presence of the IMF is consonant with, and its work there is consonant with broader U.S. policy objectives. And so I think there's a case. The fund is making it, the Treasury, the U.S. government is making it, and we just need to double down on that message.
The gentleman right here at the corner.
Thank you, Mr. Adams, and thank you, Mr. Secretary. John Gizzi with Newsmax and Newsmax Television. At the October 2010 World Bank IMF meeting, there was serious discussion about reform of the rules to finally end the continuity of European managing directors at the IMF and allow people from other countries to assume the top position. This all seemed to have ended when you had the unexpected change of managing directors the following year. My question is, could the Bretton Woods regulations be amended or changed to permit, say, a managing director from a developing country, Brazil or China? And do you expect that to be at least discussed in the coming years?
That's a great question. Nathan?
Yeah. So, my sense is very much that the managing director at the IMF must be chosen based on competence, on experience, on the broad set of qualities and attributes that the person brings to the table. Now, consistent with that, as I look around the global economy today, I can't think of a stronger candidate than the managing director that we have now in Christine Lagarde, who I think has been exceptionally effective in that position. Now, to the second part of your question, I do expect that in the not too distant future, there will be discussions of managing directors from other parts of the world. And I think that is altogether appropriate and the way it should be, as this discussion, as the search seeks to find the most qualified and effective people to continue to move forward in the senior leadership of the IMF.
We'll have a few minutes left. Why don't we take 2 questions and we'll let the Undersecretary get back to his job. This young lady right here.
Christina Wille from the German Embassy. I have 2 questions. The first one, how would you describe the relationship of the US to the IMF? And the second one, what do you think about a future quota reform where there is a shift to a stronger representation of the developing countries at the IMF? Thank you very much.
Okay. So on your second question, I think quotas should be designed to reflect countries' roles and weight in the global economy. So to the extent that we see the distribution of quota as being meaningfully out of whack with the distribution of GDP and economic significance in the global economy, I think it's very important that quotas move in a direction toward economic mass and economic weight. And I think it's important that it happen de facto, meaning that the quotas move, but I think it's also important that we continue to reform and revise the quota formula and to make that quota formula reasonable and accurate depiction of a country's merits. I would describe the relationship between the United States and the IMF as close and constructive. And by that I mean, as the largest shareholder in the institution, we have an ongoing dialogue with key leaders at the IMF. Now, we don't agree on every issue, but we listen, we learn, we compare notes, and I think that the outcome of that is very constructive from our perspective, both for the United States and for the global economy.
One last question, all the way in the back, and this will be it.
Hi, thank you. My name is Alex Shapelsky. I'd like to piggyback off of the previous quota reform questions. First of all, what do you see as the biggest obstacles internally to the next round of reform? So not like the domestic political situation here, but is it discussions on the actual formula, raising the percentage of GDP by PPP or whatever is the discussions? And then second, if there are holdups, what is the actual worry to the threat of the IMF? Because we talk about, oh, there was a 5-year holdup and we might be worried about other countries creating other institutions, and AIIB is a prime example of that. But given that all these institutions so far have focused more on the development banking realm, and that is basically a different function of the IMF, like you were stating with the technical assistance, financial assistance, surveillance, there's really no alternative to the IMF right now in those very specific functions. So if there is another holdup, if people are worried about us turning our backs on it, what's the actual threat to the IMF's role in those functions? Thank you.
So on your first question, as a general proposition, my view is that international integration and our membership in these international organizations is very much a win-win proposition. However, when it comes to quota formulas, those quota shares at the end of the day have to sum to 100. And so when one gets into that kind of a discussion, inevitably there are some countries who are seeing their quota shares rise, and there are other countries that are seeing their quota shares fall. And I think what's important, as I was alluding to, is that the countries that are seeing their quota share rise are the ones that have relatively more representation and mass and significance in the global economy. And the specificities of how that debate regarding quota formula would proceed about what kind of measure of GDP or what weights or how to measure openness or what coefficient to put on reserves just is really a proxy in this bigger battle and discussion over how the quota formula should be should evolve and apportion voting mass in the institution. As an important additional point here, the United States, given our relatively large share in the global economy, benefits when you look at quota formula in a clear and direct way and think about aligning mass in the institution with mass in the global economy. Your second question is really a deep one, in that if there's further lags in approving quota reform, do I expect that there would be another IMF that would somehow? No. But I do think that on the margin, as time passes, that it damages the credibility of the IMF. It limits the perception of our ability to be able to work constructively together. And I think that we saw that over those years while we were waiting for approval of the 2010 reforms. Now, in the event, once the quota formula or the quota reforms were approved, a lot of that is adjusted. But I think it's really underscored for us that if we were to go further down that road, that would be a costly road, and that's not one that's
Great work.
pleasure.
Ladies and gentlemen, a round of applause.